I want to tell you that the IRS is actually having a tax sale, but it's only for 2012. Let me see if I can explain. When you create an estate plan, typically the assets are placed into a living or irrevocable trust. Although there are many benefits from doing this, there are two things that this does not do for you, which I call the two myths of estate planning. Myth number one is living trusts reduce my estate tax. That's completely false. Let me restate that for you another way. A living trust does not reduce your estate tax. Myth number two, living trusts protect my assets from creditors. That too is absolutely false. Let me share an example with you. Over the last year or so, we've had commercial property owners who've come into our office, 2 or 3 of them a week. And they thought when they came to meet with us that their estate and their assets and commercial properties were completely protected. And of course, they were completely mistaken. And so what happened is one of their properties or something went down. A bank or something else caused it to go down, and because of that, everything else dominoed, and they essentially lost everything. Estate plans using living trusts do not reduce estate tax or protect assets from creditors. Many attorneys, CPAs, and financial advisors get this wrong. Because the IRS is having a tax sale, this is the year that we must get this right. And I'll explain to you in a moment why. But don't miss this point. Only irrevocable trusts protect your assets from creditors and estate tax. That's what I do. Advanced estate planning and asset protection. You want to keep your assets, and only irrevocable trusts protect your assets from another's ability to take them from you, including creditors and the government via estate taxes. So the IRS is actually having a tax sale, but is for this year only. I've been doing taxes for a long time, and this has never ever happened before. Right now, you can transfer up to $10 million of your assets for married couples and $5 million for singles into irrevocable trusts as a tax-free gift. But you don't have to make a lot of money to benefit from this. In fact, by transferring your assets, whether they're paid for or not right now, into an irrevocable trust, your assets are protected from creditors, and any assets you transfer below these limits are excluded from your estate, no matter what the estate tax is, and no matter how much they will appreciate afterward. Let me share with you a story. My father in 1969 brought the family back to the United States from Izmir, Turkey. He was stationed there to serve a tour of duty with the military. When we returned to California, he bought a home for $30,000 in 1969. In 1993, some 24 years later, my parents sold that house to move to London, England. That home sold for over $300,000. That's a tenfold increase in the value of that asset. So you really don't need to be rich right now to benefit from this. Even if your assets aren't worth very much right now, well, they're likely to appreciate over time. But you want to keep that appreciation out of the hands of the IRS and estate taxes. And to do that, you'll need to take advantage of this estate tax sale right now that the IRS is having. These IRS limits, that $10 million for married couples and $5 million for singles, expire at the end of this year. And when they do, the top estate tax rate is going to jump up to 55%. That's significant. I want to show you how you can benefit from doing this during a free consultation with me. I'll also be happy to review your existing estate plan and see what this would mean for you as we go through your estate plan together. Please accept my offer for a free consultation, and I'll look forward to meeting with you.